Hello and welcome to video 5 from TradeForexParttime.com. Today we're going to be talking about the different methods that are used to watch and to track the price movement of the Forex currency market. So no matter what kind of charting technique you're going to use, every trader is going to observe price movement across a number of different time frames depending on your trading strategy. And these varying time frames, or these time intervals, are known as periods. And as you can see on the screen here, there's a number of different common period lengths that you can use. There's 5-minute charts, 15, 30-minute charts, and then there's also 1 hour and 4 hour. And then on the longer term periods, there's going to be daily charts, and then there's also even weekly and monthly charts that you can observe. So the different time periods that are used enable you to track price over different time scales, obviously. So if you're looking at a 5-minute chart, you're going to see a much closer look at the more recent price movement. Whereas if you're looking at a 4-hour or a daily time period chart, you're going to get a much broader picture. So anyways, at the start of every period is known as the opening, or the opening price. At the end of every period is going to be the close, or the closing price. So like I just said, every period is going to have these two different prices, this opening and the closing price. And then also within every period there's going to be a high and also a low price, which is just the trading range within that period. So if you're looking at a 15-minute chart, the beginning of every 15-minute period there's going to be an opening price and then also the closing price, and then within that 15-minute time bracket you'll have a high and a low price that it traded at. So there's really just two charts that are used most commonly to track price movement, and on the screen here you can see just a simple line chart. It's just going to go up and down, oscillating up and down with price movement. This doesn't give you a whole lot of information, but it is very useful to identify support and resistance levels. So if you recognize that a certain area is a resistance, you can identify that very easily using a line chart, and then if price breaks up or down from there, it's just easier to recognize that. But here at Trade Forex Part-Time, we really recommend the use of candlestick charts. Just because of the huge amount of information that they display to you visually. And once you're used to looking at candlestick charts, you can really pull out a lot of the information and apply it to your trading. So as with the other charting with candlesticks, you're going to see an opening, a closing, and a high and a low for each period. And like I said, with all the information that a candlestick chart gives you, it's an excellent tool to observe trends and trend strength and the direction of the market. So here you can see just a blown up view of two candlesticks. On the left hand side you've got a green candlestick, which indicates that in that time period the price closed higher than it opened, so there was upward price movement. On the right hand side you've got a red candlestick, which is indicating that the price closed lower than when it opened, so there's downward price movement. The little white shadows, as they're called, on the top and the bottom indicate the high and the low for each period. And if you're looking at a candlestick chart, each candlestick is going to indicate the price movement for the time period that you're looking at. So if you're looking at a 15-minute chart, each candlestick is going to be 15 minutes of price movement. So coming back to the actual candlesticks, for upward price movement, the bottom of the green candlestick is going to be the opening price. The top of the green candlestick will be the closing price. So opening is at the bottom, close is at the top, and then the two shadows at the top and bottom are going to be the low price that and then the top of it will be the high price. And the red candlestick is basically exactly the same, except that the opening and the closing are flipped, where the opening price is at the top and the closing price is at the bottom. So traders are going to utilize all of this information, the high, the low, the open, and the close, to help determine what price action may occur in the future. Thank you for listening to this video 5 on different charting types from TradeForexParttime.com. Please look forward to our next edition, video 6.